rates still have the potential to actually go higher. But just because they can go higher, we still want to explain why homeownership is still incredibly important. So let's dig into these numbers. So over the course of the past 6 months, maybe even a year, you've been hearing that interest rates have peaked and they will likely head lower. Even I've said that. And it's likely the case that will happen. Whether that happens next month, 3 months from now, 6 months, 9 months, it's going to happen. Rates are cyclical. They go up, they go down. But everyone was hoping that it would be here in Q1 of 2024. You're seeing all of these giant corporations, Fannie Mae, Freddie Mac, come out saying, hey, interest rates are likely going to be lower here in Q1, and then they'll likely head lower in Q2, Q3, Q4. Give you lots of reasons why. One of the most important reasons people are saying, hey, election year, you're seeing job wages slow down, all this type of stuff. What they're not saying is that rates do have the potential to go higher, and there are several reasons for that. Just a few: bankruptcy filings are slowing down. We're seeing a global recession, but not affecting a US economy at this exact moment. So GDP is still at 3%. So when a global recession happens, you see a lot of these countries have to sell some assets. Why? Because they need to influx their country with some liquidity. What are those assets? Well, they're going to be selling US treasuries. When you sell US treasuries, this forces bond prices to go lower, which increases yields. So it increases the US 10-year treasury, forcing interest rates to go higher. So there's lots of macro items that can still potentially cause interest rates to go higher. Most important one for everyone to watch, rather than going into all the technical terms, is jobless claims. We still don't have a lot of labor loss at this moment. Fed just had a meeting today reiterating that, hey, they don't want to really push rates higher, but they don't want to pivot too quickly, and they don't want interest rates to go lower until they can see inflation closer to that 2% target. So we're at 3.1 now. That'll likely come down over the next few months, but we're still not quite there. So now we want to tie this into why is homeownership still incredibly important, even with interest rates where they're at, and even with the potential of interest rates possibly going higher over the next few months, likely heading lower in the future after that. Well, and it's because debt, right? And there's items such as good debt and there's bad debt. So cash is really never the answer. But that being said, I want to highlight that again. Cash is the answer as long as you don't have bad debt, right? We want to make sure you have the cash needed to pay off all your bad debt. But if you have $100,000 in your bank account or in a CD and it's paying you interest, that's great. But if you think about it, that $100,000 is not actually making you money on interest. It's actually losing money year over year. Let me explain why. Because the $100,000, let's say it earns $1,000 in interest. Well, you got to pay taxes on that. Then inflation happens, which is what we've experienced heavily over the past 3 years. So you'll see that $100,000 is actually going to lose you $400 because it's not working for you. It's working for you in the concept of, hey, you made $100 in interest. Not as much money when you're losing 2% on inflation year in and year out. And over the last few years, you've lost 4%, 5%, upwards of 9% because your money is not working for you. Well, homeownership solves that. All these people who were able to purchase homes in 2019, 2020, they were able to see their homes appreciate. Not only there's taxable benefits, there's a lot of things. So there's a lot of positive reasons for homeownership, even at today's interest rates and even at the risk of interest rates going higher. So if you'd like to learn more, let's get you educated. Call a Secure Choice Lending team member today, and we'll explain the importance of homeownership.